先生クジャク
Today we are going to assess recent developments at Alkyl Amines Chemicals Limited. Alkyl Amines is one of India's largest chemical intermediates companies with a focus on aliphatic amines. These chemicals are widely used in multiple industries, primarily pharmaceuticals and other chemicals like agrochemicals and rubber chemicals. The share price of Alkyl Amines has grown over 100 times over the last decade. At its peak, the stock traded at about 4,400 rupees, adjusted for corporate actions. Today, that share price is around 2,800 rupees, a decline of over 36% from its peak. Over this period, the P ratio, to the extent it is meaningful, has expanded from below 10 to over 60 times trailing earnings. Remember, the P ratio is far from the be-all and end-all when it comes to valuing businesses, and should always be considered in the larger context of the future prospects of a company over time and the business's ability to sustainably generate free cash flow. Like many chemical companies, Alkyl Amines has suffered from higher costs, both for raw materials and energy. When prices of inputs were depressed during the pandemic, the company enjoyed supernormal profit margins. In FY21, at its peak, the company recorded operating margins of over 35%. In its most recent quarter, this number has come down closer to 20%. Prices of key raw materials, such as acetic acid and ammonia, and of energy inputs like coal, have increased dramatically in recent quarters. Certain raw material prices have jumped over 200%. For instance, acetic acid, one of the company's primary raw materials, used in the manufacture of acetonitrile, a key product of Alkyl Amines, increased from about 40 rupees a kilo to 120 rupees a kilo at its peak. Spikes in raw material and input costs like these have caused a marked decline in gross margins and operating margins. Interestingly, while we are on the subject of acetonitrile, prior to the pandemic, it sold for roughly 120 rupees a kilo. Through the pandemic, prices rose meaningfully, approaching 400 rupees a kilo. Prices of acetonitrile have since normalized and today stand at roughly 250 rupees a kilo. The company has been dramatically affected by higher energy costs driven by higher crude prices, which in turn affect downstream prices, thereby causing higher prices for the entire energy basket. It is important to monitor developments on this front to gauge how margins will evolve for Alkyl Amines. Despite these cost pressures, output and demand remains fairly stable for the company. The company also has continued to focus on the long term and invested in new facilities and improving existing plants. Disruptions in supply chains of customers has affected volume growth for the company, a key concern as the company is more reliant on volume rather than price changes for growth. As customer supply chains have been affected by developments like unavailability of certain necessary inputs, leading to lower end production, Alkyl Amines has been unable to sell the quantity of products that they would have liked to. Alternate raw materials from China have also played spoilsport in this period. Higher logistical costs have also hurt the company on the supply side as it imports raw materials from the Middle East, North America, and Europe. Higher raw material prices and lower volume growth, and in some cases volume declines, have prevented the company from passing on the full impact to customers, leading inevitably to lower margins. Logistical issues with exports also cause some problems, but these problems appear to be easing, and management believes that exports should grow with new facilities being commissioned. While the problems faced by Alkyl Amines are clear, the more important question relates to the road ahead. Being in the chemical business for multiple decades, the company has seen multiple cycles and in bouts witnessed both abnormally profitable times and times of unnaturally high costs. The important point to note is that neither has caused management to waver. Management has remained steadfast in building the underlying business. The company has consistently reinvested funds to increase capacity through both new plants and debottlenecking exercises. This remains unchanged despite recent headwinds. The balance sheet of the company remains clean, with more than manageable debt. Interestingly, management has indicated in the past that they like some debt on the balance sheet, as it keeps them on their toes. Management is hopeful of growing revenue and profitability meaningfully in coming years, primarily through new capacity coming online over the next few quarters. Their long-term track record is important to consider when assessing the same. If prices continue to come down for raw materials and energy inputs, Alkyl Amines could see better days ahead. This process may take time, potentially few quarters. Despite these challenges, management hopes to continue growing both revenue and profit over time, as it has done for several years. This ship has weathered many a storm. We hope you enjoyed this video and learned something valuable. Like and subscribe to learn more about business and investing.